Hello traders, welcome back to my channel. So today I'm going to bring you another trading educational video. I'm going to talk about a concept. Some of you might have already heard of this. If you haven't, it's a pretty simple concept and it has to do with what we call the first trouble area. So this is a concept I first heard mentioned through Trader Dante. He's a great trader, one of the people that I learned from in the beginning, and this is a concept that basically helps you in terms of planning and managing your trades. And first, let's go over and look at a definition of what a first trouble area is. So the FTA is the nearest area of support or resistance where we expect the market to have a reaction from. So if a market is in an uptrend, then it is the next logical resistance, and in a downtrend is the next logical support. So using the concept of FTA will help us determine the potential risk reward for a trade and see if it fits our criteria for a trade worth taking. So what do we mean by that? Let me bring in the whiteboard quickly. So if we're, let's say, in an uptrend, and obviously, I mean, uptrends don't always look as nice as this, but if we're in an uptrend, well, you know that you have what we call the impulse waves, which are always longer. And these are, in this case, the pushes or the rotations going up. And then we have our retracements, which are in an uptrend would be shorter than the impulse waves, because obviously if we're in an uptrend, then that means that price is constantly breaking previous swing highs. That's pretty much the concept of an uptrend. Higher highs, higher lows. Okay, so if you're, for example, in an uptrend, if we're, looking to enter on a pullback here, let's say we get like somewhere around here, then of course, if we just look to the left, the first area where we would see maybe we have some trouble is going to be at this previous swing high resistance. Now, if we're in an uptrend, obviously, we're expecting this to break through for the trade to continue. But, it's not guaranteed. Maybe this market might push. We might just wick through it, close back in, do like a swing failure, a fake out of this level, and then maybe start breaking down. Maybe then we break this swing low and now we shift market structure, etc. A lot can happen. So when we're in a trade, we need to just think of it in a logical sense and say, okay, I'm entering here. I'm expecting, in this case, the uptrend to continue, but I need to be aware that at this point, this is going to be my next logical resistance right here. This is going to be my first trouble area. So if price comes here, we might look maybe to scale out some of our positions, secure profits, or at the very least, if we see we come here and then we break through, maybe, or if price is stuck and having trouble getting through, if we had our stop loss, let's say we put our stop loss below the previous swing low, if we see we're having trouble here, then we definitely want to tighten our risk, maybe move our stop loss right below this swing, or maybe there's even a consolidation here and we can put it below here, etc. Basically, the first trouble area is just a concept that helps us to manage positions, or also to consider if a trade is worth taking. For example, if we have a market like this, let's say a market, we have this and then a sudden drop, and then we start going like this, if you see like the market is going here and might go up, and you try to chase the market and get right in here, I mean, if you look to the left, obviously your first trouble area is going to be this whole area of supply, this consolidation that we have here. If you use a volume profile like I always do, then this would be obviously like a high volume node here. Then this would be sort of like a gap, and then we would have another higher volume here with this area, etc. But so, if you're chasing a market and you're just trying to get in right here, does this trade make sense? Obviously, well, at least for me, it doesn't, because where would your stop be? Well, probably you would have to put it on the previous swing low, and your next area of trouble is right here. Like, you can't expect to get a lot of yield out of this trade, because obviously you need to be aware of where your FTA is going to be. In this case, you need to know where. That's why a lot of times, and this is something I tell my students in my strategies too, before you even get into a trade, probably one of the most overlooked things that people tend not to do. People tend to just jump into a trade. Hopefully they use a stop, but then they don't really think about the target a lot of times. Whereas, you got to take into account the FTA, because this is going to help you set a target and then determine if it's worth taking or not. And then similarly, now that we're just talking about trends briefly again, just because we're in an uptrend, and this can be applied to any time frame, we're going to talk about this a little bit later, but just because we're in an uptrend doesn't mean that you cannot make money shorting a retracement. But are the odds the best in a retracement? Well, obviously not, because if we're in an uptrend, like I said, we expect a retracement to be shorter than the impulse wave. So just be aware of that. If you're taking a counter trend, just be aware that your first trouble area, it's like, say if you're here and we just broke this swing high, if you're trying to get short here for a retracement, you know that you're coming into an area of demand here. You're coming into an area that held as support, so your yield is probably not going to be that great. You need to get ready to get out in this vicinity, pretty much at the last significant area of support, or get out and then wait. And if we do break below this, then you can say, okay, now I'm going to go back in on a retracement because this market structure is shifting. And I'm going to do a whole series very soon on market structure and different entries using pure price action, so also be on the lookout for those. Okay, but let's just go back to the presentation. So we can use the concept in order to manage our trades, both to plan an entry or determine the best areas to take profits or scale out of a position. The basic rule for trading FTA parameters is, if you are long from support, then you take profits at the nearest significant resistance. Okay? If you are short from resistance, then you take profits at your nearest significant area of support. And like I said, if we're in a strong uptrend, then we might expect markets to keep going and break the next area, in this case of resistance. But like the rule says, you just got to be ready to scale out or take profits and then maybe look for re-entries, etc. But in general, this is the most conservative way to use the concept of FTA. So this concept should be used in line with the time frame concepts. If you take a trade on a daily level, don't just think that any resistance on a 1 hour time frame, for example, is an FTA to close your position. You need to focus on your main trading time frame, but you can use low time frames for clues if the trade is running into trouble and to help you manage your trade. Okay, so what I was talking about before, a lot of people, one of the things that they do as well, especially more novice traders, is, let's say they're taking a swing trade and this is a daily chart and they came here and they had a nice entry right over here on this retracement, and they're long. And then they come here, and then let's say right around here they go down into the hourly time frame, and over here there was like a little area of supply, a little consolidation on the hourly time frame, and then price gets here, and then they just start, you know, getting worried, and they just get out of their position because the hourly time frame, they were afraid this was going to reject over here. You got to keep in mind the higher time frame or the time frame that you execute on. So in this case, yeah, you can use the hourly time frame to look for clues. Maybe, you know, if this comes up and then we have something like this on the hourly, and we have a breakdown of a swing low and a retest, and then market comes and breaks another lower low, and now we have two lower lows in a row on the hourly and two lower highs, then yeah, maybe this doesn't have enough strength to keep going, and this might be coming back, and then that's a sign, okay, let's just scratch the trade or close it in a little bit of profit, and that's it. But just don't be scared out of a position just because you're focusing on lower time frames and you're just worried about every support and resistance along the way. So this is sort of a visual representation of what we are talking about. Let's say you're coming on this market. Let's say back here, you know, we had a big supply and then just a very quick dip down. So now we have a clear area supply here. We have a gap a common gap that's most likely going to fill, and now we're coming back up. Now you see we broke above the swing high, and now we're coming back. So let's say we want to get into a retracement on the daily support area, right into this area of demand here. We get our entry here, our stop loss right below the consolidation here, or the area of demand of support, and we put our take profit into this daily supply area here. But then if we come up here and let's say we dig into the lower time frame, let's say here there was a little consolidation on the way down on the hourly time frame, and then we come and then we just hit this and start coming down, you know, and you start freaking out thinking that this whole thing is going to reverse. Well, you got to keep into perspective the daily time frame that you're in. You just made a higher high, a higher low, and now you just made a higher high here. So this retracement, maybe on the hourly, this is going to look like a big downtrend, but if you zoom out on your trading time frame on the daily, this is basically a retracement where we expect a higher low to form, and then you go. But then, like I said, if then something like this happens, if you come over here on the hourly, and let's say you break this swing up, but then you come down, and now you print a lower high, and now you break below this swing low here. Now you say, okay, now this looks like this is in trouble, because now we're failing to continue with our higher high, higher low, and our lower time frame. If we're zooming in here, let's assume this is an hourly time frame, but if we're breaking down now below a significant swing low, then that's a sign that this position could be running out of steam. Okay, so here's a little example. This is a daily chart on the S&P 500, and we can see right here we have this big area of supply, big impulsive move. We're living this whole inefficient move down here. Market comes back up, we make this high, we come down, and we would assume if this is a downtrend that's going to continue strong, this would come down, break below the swing low, and then we would just continue making lower highs, lower lows. But instead what we get here is we hold and make a higher low, We come up, we almost test this high, but then retrace, and then we have this very bullish candle. This is basically a bullish pin bar. We just wick right through these levels, had a swing failure pattern or fake out. So then, if let's say now we go in on the next daily open of this candle right here, after this fake out here, this deviation of this lows here that we swept, and we just grabbed all this liquidity to the all this liquidity to push up. Now if we get long here, we say, okay, where is our first trouble area? Well, we just got to look next to here and look at what the significant swing highs were before, and we have 1 and 2. So if we get long here, we put, let's say, our stop right below this wick. Now the first area then that we're gonna be cautious is right here. We know this was a previous resistance. Now we are making a equal lows here, and we have all these highs, and we know we have this gap here. So sentiment for me then would start shifting up, but especially I would like to see, you know, this swing's broken definitely as a sign that we're gonna fill up into here. And so then these two swing highs will be our targets. Like in this case, I would probably look to scale out and close here. And then what I would do is say, okay, if we manage to have a high time frame close through here, like we did on, well, we barely closed through on this candle, but this one definitely confirmed it, then I'm like, okay, now any retrace we have is an opportunity to buy. You can see we have this demand here, the last move day down before we broke the highs. So any retracements around here would be a good area to long. In this case, let's say we got long on this retracement candle here. In this case, you can see the risk reward is not that great because our target is here. This is our logical first trouble. This is a big trouble area, I would say. And then where did our stop go? Well, it would probably go below this impulse candle that led to the move to break these highs. So as you can see, I mean, this is like a 1-to-1 risk reward. I made a risk reward video recently, by the way, if you want to check it out. But so you can see, I mean, the yield is not great, but, you know, it seems like this is a, you know, momentum is definitely up. We did break and shift structure up, and we have a very clear trouble area up here, a huge area of resistance, and then this would have been a great area to take profits. But again, even if you got in here, you could have held all the way here. You just got to be aware that this area is going to be a trouble area. We have two previous areas of resistance and pullbacks, and you can see how price, you know, had a little bit of trouble. We spent 1, 2, 3, 4, 5 days chopping around these swing highs before we went here. So in this case, you know, once you see that, okay, we hit these targets, now you want to tighten your risk. If your stop was here, once you get here, you move it, you know, at least you move it over here and profit, and then hold to see if we are going to break up in this case. And, you know, if you just go here and then you have a big down candle and you go on a lower time frame and there's a big shift in market structure, you know that you're wrong if the market would come below this previous swing high. But you have a very clear first trouble area there. Okay, and then here's another example. This is just a random market and time frame that I took just to go over again the concept. So you can see this market, we come up, we have this trend line, nice breakout here. We leave a gap that I marked here in this brown square, and then we have this bullish order block or this bullish demand block, and price just takes off. Then we come here and we have big support, but you can see the market is making lower highs. We're compressing down. Once we make this candle, we break these lows. Now the market structure has shifted. So in this case here, if let's say we wait and we take a short on a pullback into this broken support, now resistance, and you go in here, our stop will probably go just beyond this consolidation here, this supply area. And then where's our first FTA? Well, the first FTA would be this swing low here, but we're also aware that we have this gap here into this demand block. So we have this area here is definitely our first FTA. This is where we would look to close. At least in my case, I would look, if I got short here, I will look to close my position here, because there's a very good possibility this could have just gone like this and then just started shooting up. Okay, in this case you can see what happened. We just start chopping right through it. We invalidate this whole area. We now break below the swing low, furthering the momentum down, lower highs, lower lows. And then again, now here, entries into here will be a really great entries. We've already invalidated this whole block here. So now if you enter on a pullback into this broken support, where's our next targets in this case? Well, you just look to the left and you look either for clues of gaps or significant swing levels. And you can see here marked in purple, we have these two very obvious swing lows that we have not yet tested. So if we get short here, then obviously this will be our first trouble area. If we come into here, you can look to close everything here, or let's say you can scale some of this off here. Once we break down below here, then you can say, okay, let's say our stop loss was like here. Well, once you observe this, then you can come and now, you know, we can move our stop loss just beyond this swings. You can see we did pull back here, and then we come and hit the other area. Okay, but basically the concept of first trouble area is, like the name says, what is the next logical support or resistance area that can invalidate or reverse my position. So if you're short, it is the nearest area of where we expect a bounce or a strong support. And if you're long, then it's the area where we expect the next resistance or price to pull back against us. Okay, and so just finally to wrap up, like you can see here, and you can go, I recommend, you know, just go on your charts and practice. This is a very good practice just to be able to identify better targets on your trades. So let's analyze this Euro US dollar chart in the 1 hour. And again, I know you're saying, well, you're obviously looking at everything that happened. It's so easy to now, like, you know, just go back and say, oh, this happened, this happened. Yeah, I know, but this is what back testing is. You know, you're just going back on the charts and observing to verify, you know, concepts and things that you're looking for. For example, like, you know, let's say right over here, for example, you can see how we broke over this underneath, but just pushed out the stops, now came back up. This is a breaker. Now we have a breaker set up right here. The last cluster, a candle up that made this move that rated here, and now we break up over this shifting structure. Now we look for pullbacks. So now let's say you get in on the pullback around here. Well, now you're long, but you know, your first trouble area is clearly here. You have, you know, price tried 3 times to break this level and was all rejected. So if you get long, we're making a higher low, so you do expect this to break and this then to make a higher high, but you just have to be ready and know that this area might bring you some trouble. Okay? And if we actually, let me mark this area off. Let me just actually, I'll grab this. This is in the hourly time frame. Let's go down into a 5-minute chart and go observe over here what happened on a lower time frame. Let me make sure this is showing on the 5-minute chart. Okay, yeah, it wasn't activated. Okay, so if you go into the 5-minute chart, let's say we took the trade on the hourly time frame, and you can see how significant this level was. We had resistance, 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 but now we come back. But you can see here on the 5-minute chart, on the 1-hour chart, it looks like this just blew through here with no trouble. But if we zoom in on the 5-minute, you can see that we did come and we started chopping around this level for a little bit until finally we got the breakout, So you could go down into a lower time frame and just try to manage your trade. So let's say if you go down here and you see the 5-minute chart, you can see you start making this sort of flag or channel like up here. So you can say, let me draw this better. You can be like, okay, I'm going to go into a lower time frame to help me manage this trade. We're making micro higher highs. If we come over here and then I see that we just break below this and break below all the swing lows, and then we pull back and have a bearish retest, and now we break another low, now we're having micro structure shift to the downside, then we can say, okay, well, it seems like this area, price is having trouble getting through here, which this is the area that we were analyzing right here. There's trouble here, and then we could likely come back and retest maybe this area. We could bounce from here, but if you had your entry right on the pullback around this area and price is coming back to your entry, well, then you can see if you want to hold, or maybe you want to just close and wait for this to actually be broken, etc. Okay? And then other examples here. Here, for example, you can see again, you have a nice level of resistance here, the cluster breakout, and now we come up. If you got short, let's say you got short on this shift and break here, obviously first trouble area would be filling in this gap into this big resistance level, which we now expect to be support. And actually the market is live, but you can see from here how pretty much the market is holding up here, and it looks like it's looking for some upside. Now we're in a downtrend here, so if you're looking to get long here, then obviously this is your first trouble area right here. And in this case, it looks like this is probably going to do something like this, and then maybe come back deeper into here, unless we have a close through here then we're like, okay, now we shifted market structure, and now let's try to see if we get longs. But you know, the concept is pretty much just look to get out at the next logical area. Like for example here, you know, if this broke out here, if you got long somewhere here and this breaks out, or sorry, if you are on the top here and let's say you got short on this break here, well, the first trouble area would obviously be this filling into this gap into this cluster here, because potentially we can just do like this and then just, you know, keep going. So that's pretty much it for the video. Just again, the concept of first trouble area is just the area nearest to where our entry for our trade is, where price can see or have an adverse reaction or comeback against us. So it's areas where we should secure profits or scale out or reduce our risk by, you know, moving or tightening our stops or moving our stops in profit. Okay, that's pretty much for the video. Thank you all for watching. Hope you have a great week, and I'll see you all in this weekend with market analysis videos. If you have any requests for markets for me to analyze this weekend, leave them down in the comments below. Okay, have a great rest of the week and take care.